Hey, good afternoon. George Cavaligos for Naked Trader. Relentless moves again today. We tried a little bit of the short side late yesterday on the 10-year. We had some interesting possible patterns developing. I said keep it small. I said keep a tight stop on it. I think the market broke down last night. The 10-year traded down to 126 even. You got a little bit of a lead on it. You move your stop down to break even. Hopefully you were able to, scratch that trade, because as the U.S. came walking in and Italy's banks were getting pounded again last night, they started buying it, and we went from 126 even last night to 127.04. Right near the close today, we had backed off a little bit again, trading back down around 126.28. But we're not giving up any kind of sign of weakness here. 3 days in a row we've rallied, I think, the 10-year more than 3.5 points. Gold today up, where are we at? $35 at new highs, $16.50. I kind of missed that one. For a gold bug, that's not a good thing, but you can always jump back in. I'm trying to keep things moving along here. We'll see. The 10-year, I have 124.0708 as a big level, a big resistance point up above us here. I'm thinking there's probably another chance as we get in towards the unemployment number. I'm sure we're going to see the ADP data tomorrow, which I'm going to probably tend to ignore, but the jobless claims on Thursday, and then the non-farm data. Most estimates I've seen around 50 to 75,000 are not great numbers for the non-farm. So I think this 10-year trade, we are looking at the old highs up above us here. We've got a couple old highs to look at on the continuation chart. We got 128.01 from last spring. And then we've got 128.22, the old all-time high on the first 10-year, front month, 10-year, excuse me. What else? I sent out an idea on the Eurodollars too. So far, that one hasn't hurt us. The greens opened up around 98, 94 this morning. I think we put up a 95.5 high, sold off all the way back down to unchanged, and then rallied right back all the way up and closed on the highs. I wanted to do that via puts because you have a defined limited risk at that point. Paying 5 ticks for a trade that can make you 25 at its max is a good risk reward. It's 5 to 1. You're risking 5 ticks. That's all you can lose. That's a nice way to try and pick a top. Still might want to take a look at that one over the next couple days. If swap spreads really start blowing out, if credit spreads really start blowing out, the Eurodollars are going to lag way behind any kind of a treasury rally here. And we still have to hear from the Treasury as to how they are going to refill their coffers here. Most people seem to think they're going to come with a bunch of T-bill auctions to fill up, the stuff that they've put off over this debt ceiling situation. That'll tend to hurt the Eurodollars a little bit too. That's the short end of the curve. And if you get a lot of T-bill auctions, they'll probably get sucked up because there's so much money fleeing stocks and other risky assets and looking for safety right now that the T-bills should do fine. But it'll also weigh on Eurodollars a little bit because of the enormous supply that should be coming there. Keep an eye on the email, guys. I will keep the levels updated here, and hopefully we'll get a better grasp on what the fear trade is right now.